नमस्कार, कैसे हैं आप सभी लोग। जैसा कि हमने कल डिस्कस किया था, आज मार्केट को हम डिटेल में डिस्कस करेंगे। अ, जैसा कि हमने सुबह ही आप लोगों को डेटा के बारे में एक शॉर्ट एनालिसिस दिया था, एंड दैट वाज प्योरली बेस्ड ऑन द इंफॉर्मेशन अवेलेबल आफ्टर मार्केट डेटा ऑफ 7 सितंबर। दोनों का कॉल एंड पुट साइड दोनों का हमने एनालिसिस करने की कोशिश की। जो हमें डेटा मिला, तो वहां से डेटा से कुछ इंफॉर्मेशन निकल के आई, जिसमें जो मेजर पॉइंट्स थे वो ये था कि 19,800 पर हाईएस्ट ओपन इंटरेस्ट था, जिसपे 1,38,000 कॉन्ट्रैक्ट 1.38 crore contracts were there, or 19,100. So based on the analysis of call and put data, we have identified the potential resistance and support level. The support at September 8, it is important to keep in mind the following points. This was the data which was captured after market was closed on 7 September. As far as call options are concerned, the 19,800 strike has the highest weekly open interest with 1.38 crore contracts, making it a significant resistance level. The majority of call writing was observed at 19,800 strike price, which added 49.0 lakh contract, followed by 19,900. The highest call unwinding was seen at 90,600 strike price, which shed 62.23 lakhs contract, followed by 19,700 and 19,500. If you look at the put side data, the put side data was also giving this same story. The 19,700 strike was having highest open interest for put option with 2.16 crore contracts, serving as a crucial support level for September 8. The majority of the put writing was observed at 19,700 strike price, which added 2.06 crores contract, followed by 19,600 and 19,100 strike price. The most significant put underwriting was observed. The most significant put unwinding was observed at 19,200 strike price, which shed 22.48 lakh contracts, followed by 18,000 and 19,500. So in the early morning, when we analyze the data, we came to the conclusion that today 19,800 and 19,700 strikes are significant levels to watch for the Nifty. The 19,800 strike is highly likely to act as a resistance, while the 19,700 strike is crucial as a support level. Call writing is dominant at 19,800 strike price, while put writing is dominant at 19,700 strike price. Additionally, put unwinding was significantly notable at 19,200 strike price. Monitoring these levels and the activities, it is imperative as they provide valuable insight in the market sentiment and potential price action. When market open and somewhere at 10 a.m. the resistance was observed at 19,800, which was having highest volume and open interest, and the highest change in open interest was at 19,800. And at the same time, the open interest was looking weak toward top at 20,000. The support is at 19,700 of volume and looking weak toward top at 19,800. Highest open interest was at 19,600 strike price, which was weak toward top at 19,700. The highest open interest change was observed at 19,800. In the resistance side, the strike price 19,750, 19,800, 800, and after 800 it was 18,900 and 20,000. These were the strike price which was saying that market can go to this level. In case of support side, strike price 19,600, 19,700 and 19,800 were important. So in totality, the market at 10 a.m. early in the morning was giving an impression that it can move from 19,600 to 20,000. Market was having a setup of 400 points today, but later on, as the open interest and volume keep shifting, they restricted the market to some range. And as per the data available at that particular time, extension of resistance, since the resistance was in 18,000, so extension of resistance was seen somewhere 19,812, and the extension of support was 19,616. So on the basis of open interest data, on the basis of volume data, the range which was extended into 400 points have been seen between these two levels where market was supposed to move. And generally it was observed that 19,616 may be the probable day low if market takes downward journey So market can go maximum to value of 19,665, and suppose market has become bullish and it took northward journey, then 19,858 was the level which was visible at 10 a.m. So at 10 a.m. it has been very clear that these are the extreme ranges, or these are the extreme strike prices in between market will trouble. So if day advances, market shown it concern, and at the same time we have taken a look at the open interest at different strike price. We have taken a strike price of 19,750, 19,800, 19,850 and 19,900. On these strike price, we observed the change in open interest of both call and put side. If we look at the strike price of 19,750, early in the morning, it is saying that it will not allow the market to come down. Although in the later part of the day, somewhere if you look at the time, it was 10:38 a.m. The call side change in open interest at 19,750 cross the put side open interest change curve, and remain in that region for quite some time, and again started declining. At 10:30 to 10:40 a.m. the possibility was looking that the market may go down, and the strike price 19,750 may fail to hold the market, but within a span of say 40 and 50 minutes, things change. Situation reverse. All side open interest change start declining. So at 11:45 a.m. it was clear that market will not cross down to 19,750. Now the market was in between 19,750 and 19,800. 19,800 was giving the same scenario as we have observed in 19,750, and in this condition market come down, and if we look at the market values, market come down to the level of 19,729, and the time was 10:35. At 10:35 market touched the lowest level of the day, which was 19,731. So the market was in control of 19,750, because if we look at the range of 19,750, it was 19,725 and 19,775. So market was quite within the control of 19,750. Although there was a change in open interest, coal open interest advances, and the advancement in coal open interest brought the market down to this level. Later on, market went up, and then it reached its extension of resistance somewhere 1140, and from 1140 onward, market was within the control of 19,800. If you look at the market throughout the day from this particular time, say 1150, you will see market was highest market has dipped to 19,795. Otherwise, market has been in the range of 18,000, 18,020. So, market was from 19,000, 18,000, 18,000, no, 7,900. एक बार जरा क्लियर करना इसको. 19,792, 93 was the value, and from that value, market has gone to probable high day. The probable high day value what we have projected that it will be 19,858, but market has gone beyond it, and the value of 19,864 was observed. So generally what we have predicted in the morning that market will not go beyond 19,858. The value was 19,864. So generally 8 or 10 point market can move in either direction. So if we say that what we have projected on the basis of data available at the evening of 7th September, we concluded draw on the basis of it, and generally whole the day market has been in this region. And you see, when we were discussing all those things, only apart from two things, open interest and volume, and one more thing, there is change in open interest. Apart from these three things, I have not used any indicator, I have not used any tool. Simply I have seen the chart of trading view to understand the graphical presentation of the values. So this is how simple is prediction of the market. Generally, market run as per your as per the data available and how you are interpreting the data. Generally, everything is hidden in data. Whenever you are reading option chain, if you study the data, if you maintain the data, you honor the dignity of data, you will find that values are with you, values are in your control, and whatever trades you are taking, that trade will be 100% successful. Generally, we have to see only few things. We have to have control on our entry and exit. We have to understand the direction of market, and we have to see what is the magnitude of movement in that particular range of at those particular levels. the whole market, what has been exactly moving throughout the day, that has been predicted well in advance at 10 a.m. early in the morning. So you are advised to have faith in your data, faith in your analysis, and faith in your prediction. So the option chain is nothing. Option trading is nothing but purely understanding of the data, understanding of the values of different components of an interest, different participant of the option chain. The Greeks is also an important part. Implied volatility is also important part. Throughout the day, you monitor these things, how implied volatility is changing, how there is a change in the value of Greeks. At the same time, how the volume of open interest and volumes percentage changes are changing. These points you have to observe, because if you are observing these things, you will get information well in advance. When market is going to shift its mood, on the basis of the movement of volume and open interest change, percentage change in the growth of volume and open interest number, you can easily find out whether market is going to up or market is willing to take a north or southward journey. So this is so simple. Everyone can understand, provided that they show their interest in option chain. They regularly observe the option chain data, and they try to make their interpretation and try to validate their interpretation with the help of data available. So this is all for the day.